give you exposure to international equities. But I think if you are actually a relatively new investor, if you just diversify across domestic asset classes between equity, debt, and commodities, I think that should be adequate.
Absolutely, Ashish. But on that note, viewers, we're going to slip into a very short break and continue this conversation with Ashish after the break, so don't go anywhere. Welcome back to MF Corner on CNBCTV18. Now let's keep it going with the discussion in terms of what our CIO for the day, that is Ashish Gupta, is doing in terms of strategies and how they actually build their portfolio. Now, Ashish, is there some strategy that you all follow to be ahead of the curve in terms of volatility or global events? How do you judge? Because we know Trump tariffs are going on for a while. So do you make changes there? How do you all adjust your portfolio?
Sure. As I mentioned, we cannot remain unaffected by global events, right? Now, there are some events like geopolitical risks, which are the one-off event, and which may mean that there might be intermittent volatility, but really many of these do not change the course of the portfolio. So some such events we will not be kind of very reactive to, right? But there could be other events, for example, you mentioned tariffs, right? So those are something that we believe demand attention. That may require changes to the portfolio a bit more actively. It could be potentially impacting some of the sectors and companies fundamentally. It could affect demand for some export-oriented companies. So, for example, over this period, as this issue has become more front and central, we have actually reduced our weight to export-oriented sectors like IT services and export-oriented companies. So you have to actually look at each event on its own and first decide whether it is just a one-off event or is it going to have really a fundamental impact. If it is one-off event and it will hopefully not play out for a long time, then the portfolio might not need too much of a change. But some of these things are going to impact the companies fundamentally, and therefore we have to reposition the portfolio.
Absolutely. You have to, but risk with risk, there is return, right? Higher risk, higher return is what we talk about. Though we want no risk and only returns, risk is something that scares everyone. You said volatility is a part and parcel of the market. You mentioned it time and again through the interview. Can you share a way that you have managed some risk that you all have faced in some point of time and has really saved the day, or that could help our investors as well?
So I think, as I mentioned, one thing is being really confident of what you own and building a portfolio where the risk, if you define it in terms of volatility, is reduced. The other risk is always that one should not get caught up in the mood of the market and fall prey to many narratives necessarily that are running through, right? And I think one instance I can share is of our small cap fund that, like all our funds here, also we manage, among other this, the portfolio liquidity risk. And in fact, despite running a fund that is majority into small caps, the liquid.
I think we've snapped the line with Ashish. We'll connect back with him as well. He was giving us an example. Yes, Ashish, continue.
Yeah, sorry. Yeah, so I was mentioning our small cap fund has one of the best liquidity.
I've been an Alma Beta alumni. I graduated in 2021. Alma Beta has helped me achieve a better salary, and so as the quality of life improved. I'm working on better projects and I have better work in my hand now. On my first switch, my salary
Small cap index, and we saw a drawdown of over 20% in the index level. Our fund did very well and actually now is the best performing fund in its category for the last 6 months. So I think if you are able to really stay away some of the narrative driven investment, you manage the liquidity as well as the sizing of individual investments well, you can manage the volatility much better.
Ashish, what has been your biggest lesson so far as a CIO, that you've learned in terms of investing?
So I think my biggest lesson remains that one has to be objective and not fall prey to market narratives. And actually, over the last 10, 15 years, we are seeing this becoming more and more important because of the social media and overall media overload. What is happening today is that news and information is being transmitted simultaneously to everyone, right? And what that drives is that everyone is actually tending to react similarly because everyone is getting the same information literally at the same time. And that leads to much more reactive nature of the market. It leads to a lot more herd mentality taking over rational thinking in the market. So I think it becomes even more important to kind of stay objective during this, not necessarily react to every piece of information or news that may be coming your way.
Absolutely. And, Ashish, if you are investing your own money today, what would be your mix? What would be your consideration when you're picking up a fund? And how would your asset allocation actually shape up today?
So I think in today's environment, I would add exposure to hybrid funds. I think they are a great way to actually get opportunities both in the equity as well as the fixed income market in India. I think given the macro we have and the strong returns equities have given over the last 4 years, I think over the next 12 months, returns in equities will be more modest compared to what we have seen in the last 3-4 years. So I would prefer hybrid fund at this stage. Over the course of last year, I've of course also added some passive and thematic funds because I think those are certain products that give another flavor to investing.
Okay, Ashish, Thank you so much for joining in with us, giving us insights in terms of market, the conditions, and what you should be doing while there is risk. You know, learning from a CIO is very important for us as well. So thank you so much for joining us on the show. And
thank you for inviting me.
Thank you. And viewers, with that, we're absolutely out of time on this edition of Mutual Fund Corner. Thank you so much for tuning in. Up next, if closing bell to take you through the last hour of trade.